Again, this is a very easy way to get yourself in trouble with the IRS. This is not by any means the wildest thing that you can see about LLCs online. As a matter of fact, LLC Twitter has become like a subculture of Twitter where you see all these people online sharing all these things that they feel an LLC suddenly allows you to do, whether it's walking away from a loan, somehow coming into millions of dollars that you wouldn't have had before you open this LLC. And it just can get really ridiculous. Here's another from back in the PPP era. It says, take $150 out of your stimulus check, go get you an LLC. Now you own your own business. Now go online and get the 5,000 small business grant from the SBA. That's how you turn $150 into 5,000. Now you have 5,000 in your own business. Take out a credit card in your business name, use half, then pay it off. Make your business credit perfect. Every time you spend $1, file it under the business. End of the year, file those taxes, pay those taxes, start living good, all off of $150. Thank me later. This is free game. So it is clear, even with a cursory review of your social media accounts, that when it comes to LLCs, people have somehow overnight turned themselves into both tax and legal experts. And in my opinion, there is a fundamental misunderstanding as to what an LLC is, how it works, and how it differs from other forms of business ownership. So let's get into what it really is. An LLC, which as we share stands for limited liability company, is a type of business ownership that really exists as a hybrid between two different forms of other business structures. One of those forms that it kind of molds itself from is either a sole proprietorship or a partnership, because each of those entities are what's considered pass-through entities. Now, what do I mean from that? We'll talk about what an LLC is and what it isn't after the break. But what I do want you to know is an LLC is something that you open when you actually have a valid business purpose. It is not something that you do simply to get a tax deduction for things that you want to buy in your personal life. And when you generate business through that LLC or that sole proprietorship or that partnership, there are certain things that you can use to lower the business income on which you pay taxes. So you may generate, as an example, $100,000, and you may have business deductions that lower your taxable income for that business from $100,000 down to $50,000. Whatever you get to that net business income amount, that entire amount is passed through to your personal tax return. You cannot leave that amount in the business itself in terms of when you pay taxes on it. It all passes through to your personal tax return, on which you will pay personal income taxes at the federal and state level. This differs from a corporation. If you have a C corporation, as an example, you have the ability to retain some of the earnings of that business so that it all does not pass through to your personal tax return. But when it comes to that hybrid status of the LLC, the characteristics that it shares with the sole proprietorship and the partnership is that net business income passes through to the personal tax return. Now, the other part of this is the corporation, like the C corporation. And with a corporation, you have limited liability for the owners of that corporation. And this is the characteristic of corporations that the hybrid structure shares with an LLC. You can see it in the name, limited liability company, with certain limitations, which we'll talk about after the break. If you have an LLC, you are protected to a certain level from your personal assets being on the line in the event of a business loss or litigation on that business.